Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, November 29th, 2018. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We had a major rally in the previous session. Basically, just as Fed Chair Powell was walking up to the stage, the market was already starting to rally. As he spoke, it continued higher. After he spoke, it continued even higher, and we closed on highs. Remember, this comes after a Monday where we were looking like we may see some sort of weakness here as we were unable to get above multiple day highs. Tuesday morning, we were looking at perhaps a failed new high that was developing. However, given where we were in the chart, given how we were at near support, the idea that that could fail was in the back of our minds, and we mentioned to watch for signs of failure of that failed new high, as it could lead to a squeeze, and we've seen that come to fruition now. Now, those types of signs right there can usually signal a major turning point in the markets. This type of rally, this type of move that we saw yesterday was significant. It's a huge move, especially after a failure to get a new low here. We're at the lower end of the range, and at the very least, we could see a return back toward 2,800 to 2,825. That's what I mentioned earlier when we were near the lows on Monday. And so we've gotten a very nice move. However, we're still in the framework of the downtrending market. We could still see more development in here before we see some sort of move, whether it's up or down. But this is near-term bullish, and it looks like it could have the potential to catch more fire to the upside, especially down the road. Additionally, we have a lot of different stocks in the market that are looking like they are ready to push out of their ranges. So this could be rather significant as we head into the end of the year. We have a couple of more days here, trading days, until the end of the month, and then we start a new trading month on Monday, December 3rd. I will host a monthly market outlook on Monday right after the market closes, 3:30 p.m. Central Time. Please join me for that. We'll talk about year-end outlook and also what to expect heading into the beginning of the year. And so right now, this is pretty significant. Today, after a big day up, you would expect compression and digestion. So look for a sideways type of trading range type of day with an upward bias. We could see more of a pullback, even as deep as, say, 2,700 today. But any move into that zone needs to be defended by bulls. So between 2,700 and 2,705, if price were to get that low today, I would expect bulls to defend. If not, failing to hold that area could be significant. So right now, you would expect some sort of compression, maybe a little pullback toward yesterday's midpoint, but bulls need to keep that area bid if this is going to continue to push higher. So we'll continue to see how this plays out. If you take a look at the NQ, very similar price action again. A failure here to see a failed new high, and instead price pushed higher through that level. A big squeeze yesterday, and we are now back, basically back toward the October close. Not quite there just yet. So again, another big up day here. You would expect compression today, digestion, but you would also expect bulls to defend any pullback, say as deep as 6,800. Any pullback as deep as 6,800 could be a buying opportunity. And overall, if price can hold here, we could see a pop that leads us back towards 7,200 to 7,300, at least on a near-term basis. A break of this trend line could be rather significant as well. We've had a nice downtrending channel. If it can break that, it could be significant. So again, starting to look modestly bullish here. We got to see if these markets can continue to hold on to these gains. Now, taking a look at crude oil, you'll notice here this one has continued to push lower. We talked about earlier in the week that after Monday, any push into 52.25 to 52.50 could be a selling opportunity, and the market pushed into that area on Tuesday. It pushed into that area on Wednesday, and each time it dropped 1 to 1.5 points down. That was no different yesterday. It hit 52.50s and dropped again. Here we are hitting a low today at 49.41, so we did get into the 40s, but we did not hit the 49.17 CVPOC. Very, very close, and we could still get that level. So overall, this continues to push lower. There's no major signs of strength just yet. We have had a pop here today, which looks pretty decent. But until the market get above 52.50, this market still continues to trend lower. So above 52.50, especially with the range we form here, could open up a pretty solid squeeze if it wanted to. Back toward 55 easily, maybe even back toward 57s. But this market has not been able to demonstrate that it can do that, and until 52.50 is crossed, we still have a downward trend that could be ahead. So right now, looking for more near-term weakness unless 52.50 is crossed. That could lead to a major rally on a short-term basis above 52.50. So keep an eye on that. With the failed new low developing here to start the day below the previous 4-day lows, that suggests that we could come up here and test that zone. So we'll see. Now taking a look here at RTY. Remember, RTY was one of the ones here that gave an early signal that this thing was dropping. This one fell hard, broke through the 1620s, gave it another leg down. But here we're seeing again signs that this could be a major turning point in the markets. We had this low and then another low here, didn't quite take out the low. And then we had a failed new low yesterday that led to a stop run day, and we're holding now. Again, this type of behavior usually opens the door to some sort of major move to the upside down the road. Again, could December be very, very bullish? That could indeed be the case. So if price can hold, say, 1500 here in the near term, we have more upside that could take us toward 1580 and as high as 1600 on a near-term basis, and beyond that opens up perhaps recent highs. So again, we will see how that plays out. That would be, months out, right? 1-2 months out if it were to get up to that zone. So we will see how that develops. Lastly, let's take a look here at ZB. ZB here has developed a range below support. Remember, we talked about the 141 zone, 140 zone. That's the prior lows. We held at it, dropped, we came back to it here, and I mentioned if price can get above that zone, there's a rally back, and so far it's been offered at that area. We got this little range that's been forming here, and if price cannot get above that area, right, if we cannot get above the 140s, and right now we had a rejection, and then here today we're pulling back to it, this could be a selling opportunity back toward recent support. So above 140, 140.15s can open up a move back toward 143 and 145s. Failure to do so opens up a return to recent lows and maybe even new lows. So this is a very, very important inflection point right here for ZB. 140.04. Failure to get above that zone opens up a return back toward the 136s. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room.